Welcome to the Monocle Banking Podcast, your weekly foray into the world of banking, finance and insurance, as always curated by Monocle Solutions. I'm your host, Michael Avery. Well, from funeral policies that anchor households in times of grief to long-term savings and protection products that build resilience, the mass market insurance space is undoubtedly the heartbeat of South Africa's financial system. 1 year after Sanlam's 6.6 billion rand acquisition of Assupol, more than 5 million policyholders now sit under one umbrella. The integration is reshaping pricing, distribution and trust in a sector where affordability and access are absolutely everything. Today on the Monocle Banking Podcast, I'm joined by Bongani Madikiza, who's CEO of Sanlam Retail Mass, to unpack his own career journey, the economics of scale in a low-margin, high-volume market, and what this consolidation means for consumer value and financial inclusion in South Africa 1 year in. Bongani, great to have you on. South Africa's households are juggling lots of things at the moment. There's high rates of joblessness, there's easing but I think still quite sticky inflation at certain levels, and obviously tighter budgets. In a line or two, what problem are you trying to solve for the mass market customer right now?
Michael, thank you for having us. I think for me, our customers, as you've rightly pointed out, are struggling. We need to create value. So the first one is value, and the second one is accessibility. When we talk about value, we mean what are the things that matter to customers, and are you able to meet them, the customers, where they are at? And secondly, accessibility is around ensuring that we are accessible. We are not a predominantly urban business. We are not predominantly a business that requires customers to travel to us. Actually, we need to create capability that gets to the customers versus customers coming to us. And that, for us, helps those customers, but it also provides us with a competitive position.
Now, it's very difficult to do it in a couple of lines, and I commend you for doing that because I think you've done exactly that. We can and we will obviously talk about some of the detail, but let's just look at your career so far and the kind of leadership mandate that you've got. Your route to Sanlam Retail Mass is interesting. You spent some time, I see, at Sun International as a group social equity manager. You've moved through the Big Green, one of your big competitors at Old Mutual. You've worked at African Rainbow Life. What experience would you say has most shaped how you think about scale and distribution, trust and unit economics in the low-ticket, high-volume game?
Michael, before you get to the work experience, the things that shape me particularly is where I come from. It is understanding that the number of people in our country come from rural areas. And in that rural setting, you need to be able to respect that these people have a voice. And in that voice, they also have dreams. And therefore, they must have a financial plan that talks to how they leave a legacy for their children. So that's the first part for me. You know, I always tell people this story. My grandfather had cows, and he used those cows to make sure that our parents went to university. He would sell one or two of his cows to facilitate that they went to university. And when he passed on, he left some cows for some of the next generation. And that's about legacy. You have to start there. You have to start there and ensure that South Africans have an appreciation of leaving a legacy, have an appreciation of earning for life, have an appreciation of not being too selfish about how you create value for the next generation. And I was fortunate that I worked for different people in different settings, and they not only insisted on ensuring that you take care of the customer, but they also reminded me that hard work actually is the thing that enables you to have a different mindset, to be able to help the customer, to be able to think through the problems much more than other people. So for me, is how I shaped my career. I'm lucky. I don't think a lot of South Africans have got the luck that I've had. I've worked for big organizations and I've been entrusted with big responsibilities at a much younger age. And that is why I'm able to do this job now. This job comes with a lot of challenges, but it was as if I was being trained in all of those jobs to be able to do this one. And I'm grateful for it. Just to give you one example, Michael, one of the things that has, in my language, we have put you through the ringer, as it were, is an appreciation of how important everyone in the organization is for us to achieve anything. So
Yeah.
we're going through an integration now. You have to respect everyone's views. And that in a world where, an African man has a very strong ego, it takes a lot of lessons because of the experience that you went through in the different organizations.
And there's that old Pan African proverb that if you want to go fast, go alone. If you want to go far, go together. And I'm sure as a leader, that's what you've been trying to do as you integrate Sanlam and Assupol and the various strengths that they both bring to the table. So, what's the core of your leadership mandate post Assupol? Surely not growth at all costs. Is it more growth with persistent discipline and lower cost to serve? How are you looking at the integration through that lens?
We look at integration through various lenses, but let's start with we must respect the scale that we're given. When you put two businesses together, you have a challenge that Michael and some of your listeners will have an appreciation for this. By and large, when you do an integration, the first thing that happens is you destroy value. And then you get celebrated because you've gotten it back to where it was before. So I think the first thing we obsessed ourselves with is we will not destroy value. The second thing is you need to use scale to grow, as in how do you drive productivity and how do you drive better outcomes for customers. And the third one is the access thing. So I talk about this access thing because it's quite critical to how you become a better organization. To give you a sense, we will have about 6,000 advisors on the ground collectively as the two businesses. We are busy now getting everyone onto the same digital platform. We would have finished that process by the end of this year. And all of those advisors would be able to go to customers in a way that is a bit more controlled than we have had before. And we're only doing that not only to drive this productivity thing that I spoke about, but also to make sure that the access that our customers have is driven by a controlled environment at the back. And I want, I don't know whether majority of my colleagues listen to your podcast or your radio show. I can tell you this, these people have done an exceptional amount of work to drive us forward. And I always like to acknowledge that the greatest things that they've done for the organization. We've not lost value. We've been able to improve productivity. And now we've just finished a process of giving access to our customers on both branches. So we've had Sanlam branches, we've had Assupol branches. If a customer now tomorrow walks into a Sanlam branch, they'll be able to be assisted on Assupol and vice versa. That for me is progress. And that's what we're trying to do. We're trying to ensure that there is a value accretion over this period. And then we can then start talking about the great things that we're going to do further. How have we been able to do this? We have insisted as a team that our focus is on building a new business as opposed to bringing Assupol into the old Sanlam sky. We said we're building a new business together. Let's have lofty ideas together. Let's set a new paradigm together. And I think our people have backed us in that endeavor.
And, you just reminded me that Warren Buffett famously said he just recently celebrated, what was it, his 95th birthday, that you don't buy value, you build it. And it's very much to what you were saying, Bongani. Acquisitions provide the platform, but integration builds the cash flow. And all of those financial model synergies that look good on a spreadsheet are only on paper until the execution teams make them real. So really encouraging to hear that culture is strong through the organization of team and execution. Maybe on the detail around your integration status, the kind of systems and products and people, where are you on the IT consolidation and the advisor tools and all of the branch repurposing and that kind of thing?
Advisor tool, we are ahead of our plans. Branch repurposing, we are in line with our plans. IT, we've slowed that down a bit, and I'll talk a bit about that just now. And then servicing, we are ahead of our plans. Let me come back to the IT because it's one of the interesting things about business is when you make a change in IT, must be you are clear about how the value chain is going to work. We initially thought we were going to do changes in IT, and then as we got people who work for us who actually know the day-to-day nitty-gritties, they said, guys, let's sort out the value chain. Let's be clear how a customer is going to travel in this value chain. Only then do we then talk about how we're going to enable the system to support that. So that's why we've delayed that a bit. It is still going to be done by the end of next year. But I think as difficult as that is, we kind of comfortable that we're following the right sequence, as it were. So integration of our distribution is on track and the productivity is up. The branch network and the accessibility by customers is on track. The products roadmaps and trying to simplify those is on track. The only issue that I think we still need some work on is the IT work. But as you would appreciate, these are things that you can't undo. Once you make the decision on IT, you can't go and outdo it. So I think we make sure that we don't have to find ourselves going the extra mile in the wrong direction.
It shows you synergies are earned and not given, especially when it comes to IT, Bongani. I think too many people have been seriously burned by rushing in where I think fools fear to tread. Now, if you look at insurance at this scale, at this level, at the mass market, I think distribution economics are critical, aren't they? Because one of the truisms, you don't roll out of bed and say, hey, I'm going to go buy a funeral cover or any kind of insurance. It really is sold rather than bought. You said you've got, what is it, 6,000 agents? So what's your split here between tied agents and IFAs in the mix? And what's your model for channel conflict and productivity uplift per agent and their replacement rate reduction targets?
So, Michael, we did something that was a bit painful, but was the right thing to do for our customers. We started with, we're not going to allow replacements between the businesses. That destroys value, but it also, that means because our agents will have access on both sides, you are basically saying they now have customers that they have access to. So we just made sure that there is no churn between the two businesses. Having said that, we realize that there are customers that will need to change some of their policies. So we've not outlawed it. All we said is that we're not going to pay attention to people who are churning business internally. That started with establishing rules in the business. It ensured that we've a way to protect the customer. So let me start there. The second thing we did is to worry about how we get to the customers in the different areas. So in order to avoid channel conflict, we're now busy with how do we spread our people in a manner that allows us to cover the whole of South Africa without people going to the same place. An example, if all of our advisors want to be in Joburg and they want to be in police station in Joburg, then we will have all 6 advisors going to the same place and then there is no spread. You need to be able to be clear about there are X number of police stations in Joburg. We need all of them to be serviced. There are X number of schools. There are X number of commercial work sites. How do we ensure that all our people get to those? So you prevent channel conflict by giving people an opportunity to go to other parts of the market so that they are able to get to customers that we have not served or that are underserved. The majority of the people that I spoke to you about, the 6,000, are tied agents. We've got another 1,000 brokers, or what I would call quasi-brokers. When I say quasi-brokers, it's people that we provide help to build their own businesses, but we still provide cover for license and those kinds of things. It's quite important for us in our journey to build new businesses, and I'll bit about that. But those people essentially are the people who we need to ensure that there is no channel conflict and we send them to different parts of the country. We are challenged. It's a good challenge by the fact that we're not as strong in a place like Gauteng. We're not as strong in Western Cape. Maybe I should say Cape Town and Joburg. And I think there's an opportunity for us to grow there. And you know what they say, if you can make it in Joburg, you can make it anywhere. So we need to be able to make it in Johannesburg. So I think that gives us an opportunity and an impetus for growth to give up some upside in the short to medium term.
Very interesting indeed. And I see, just from a brand architecture perspective, Assupol retains its brand presence. And so you've got to ensure there is still that kind of brand autonomy and on the other hand, there's some kind of platform standardization so you don't lose community trust or efficiency. So where do you draw that line?
Michael, we've taken a decision that we will have one brand over time. The transition to have that brand is obviously a delicate one. I would not guess your age, but obviously for people like me, we remember there was African Life. We remember that at the time when we did that conversion, a lot of people said we were going to destroy value and we were able to manage that transition very well. And we intend to do the same thing here. The difference here is that we want to keep Assupol as a pro brand. So the brand will still remain. But we believe that for any investment and for any protection of the customer, you have to have one brand that deals with the customer out there. And in our view, it's a matter of time. So when you ask me in 18 months' time, you will find that the Assupol brand as a company brand would have been reduced, and Assupol as a product brand will be slightly elevated.
I want to come to the core really of the value proposition now as well, because I mean, if you look at it, both brands are still very strong in the funeral cover market, and it's still by far and away the most common insurance product in South Africa. If you look at the FinScope study, the most recent one, I think, had over 50% of adults holding at least one. Many households holding overlapping policies, and I think it's one of the criticisms of our industry is that South Africans are chronically overinsured on funeral policies, but underinsured in areas that really build resilience. So, Bongani, how do you make sure that this deal doesn't just double down on that problem?
Yeah, that's an important question. But I think as a start, we do need to recognize the responsibility that comes with being the one who works at home. I use this example. If somebody passes at home, they will wait for Bongani to come from Joburg. And you need to ensure that you've got means to be able to take care of that responsibility. Having said that, it's not help to have 16 means to take care of the one problem when you can have other risks that are mitigated. So I think that's important for us. But Michael, that's why we're talking about planning for life. We're saying customers in the retail mass space have the same aspirations and the same needs that customers in the retail affluent space have. They may have smaller wallets, but they have the same aspirations. What we need to address is how do we ensure that we provide them with what they need given the price point that they can afford. So you hear us talking about modular products as opposed to the same old, bundled products that we had. So we're working hard at modular products in short term, we're working hard at modular products in life, we're working hard at modular products in health, because the biggest issue for South Africans right now in risk management is the health question. Majority of the customers do not have, particularly those who are outside of government, do not have medical aid. We need to have primary health care for those employees, so for those customers, so that they have access to better means to take care of their health. The second issue is we talk about life cover. You cannot then say traditionally we just want 2 million, 3 million life cover. We have to start at a price point that customers can afford and at the price point that makes sense for customers and match the level of risk that they're trying to manage. So I think those are the things. And then when you get to short term, and I know it sounds like a joke, but it is not. There are parts of our country where people do not, as unfortunate as this is, they don't take the whole car. They will take your tires before they take the whole car. If you live in that community, you want to cover your car. You want to cover your tires before you cover the car. And a comprehensive proposition does not meet your needs at the price point that you can afford. So these are things that we're now working together as a team to ensure that not only do we provide funeral or even life, we provide a whole section of needs for customers. And obviously, we also have other competitive pressures that we need to respond to, which need us to think through other things including transactional and lending as offerings for our customers.
Coming back to the health issue, do you think potentially, and being mindful of what you've just said about obviously pressures on spending mean sometimes you just want cover for your tires rather than for the whole car, would there in certain circumstances then be an opportunity for funeral cover to be more of a bundled gateway to particular savings products like healthcare, for example? And, that could obviously reduce their overselling risk.
Yeah, the healthcare, as in primary healthcare products and funeral, can work together. We would struggle. You recall when we had funeral and savings together in the old endowments, and we had our own challenges. I think, Michael, the healthcare proposition is spot on. We need to do something that links the healthcare proposition with funeral, that links the healthcare proposition with life, that links the healthcare proposition with other products, because it's important for customers to be able to afford it. But it also helps us for customers to have access to healthcare because it elongates their lives, but it helps communities to live better. That for me is where, if the day I retire, that's what I would see as success in the work that I would have done here.
Because, ultimately you have a huge role to play here in deepening and broadening financial inclusion, which is what the industry always talks about, conferences every year. But to really move to that at scale and to help people move from 5 funeral policies to one good one, and then using that premium headroom to build real financial resilience elsewhere, it also offers you an opportunity to cross-sell and to also broaden your own business. So it's not just doing it out of altruism here. If you look at your data, there's a lot of regulation in this space. There's Kofi coming down the line. There's all kinds of things happening. Two-pot, we've just had a year of two-pot. Are you seeing evidence of withdrawals disrupting debit orders or improving engagement? How have you seen two-pot impact through the numbers?
I'm an eternal optimist, Michael. So I'll start with the positive. We have a two-pot. But what we don't talk about is that people have now been forced to retain their pension and without cashing it out as they change jobs. So that is a very big win for savings, also a big win for industry. So, of course, there are some tweaks that we need to work on, but that is a very big win. It will change the dynamic of people retiring without any appropriate accumulated credit. As it relates to port, I think obviously everything still needs to improve, but I think that access helped a lot of the customers, those who have gotten proper advice to get out of debt and to manage their affairs a bit better. We still, as an industry, need to do a bit more to help customers, if they are going to use that money, to use it for appropriate needs. This thing saying it is not ideal and then stop there is not the right approach. Our approach, and the approach that has been taken by the Sanlam Group, is let customers understand what they're getting themselves into, and let's help them get out of debt, and let's help them understand that this money is actually a legacy changer that will change their lives forever. So I think that's our approach in the two-pot, but also in just understanding what are the things that we can do better as a company, as an industry. One of the things I will tell you, Michael, is being big comes with responsibility. It comes with responsibility to know that we need to reach more people to have diversified products. It means we need to reach more people to have financial inclusion. That is why when other people are saying they are not doing any business below 6,000, we are still doing business with people who earn less than 6,000, because we know that our brand provides a better protection than any fly-by-night that people can have access to. I think that responsibility we take seriously, but as we map out our business going forward, we know that customers need more than just funeral. They need a holistic range of services, and we must take that responsibility seriously as Sanlam.
And just lastly, Bongani, everyone's talking about artificial intelligence at the moment, but data really is the core of delivering this kind of advice at scale. Where are you deploying AI today? Is it lead scoring, fraud, next best action? And what outcomes are you comfortable putting on the record from the deployment of this technology?
AI is an interesting beast that we must have another discussion about. We are deploying it on trying to limit fraud, and it has helped us a great deal because one of the things we find, Michael, is that we are inconveniencing a lot of customers because of a few scammers. So we are working hard at just using that to limit fraud. The next challenge is going to be just understanding how we can facilitate next best action for customers. And that requires us to have a bit more data from, does Bongani now have a child? Has Bongani gotten married, etc.? All of that stuff, how do we integrate it? As much as data is available in our country, we need to convert it into intelligence so that it becomes like AI, as it were. So I think that's the work that we still need to do. But as we sit here, I'm comfortable with the work that we're doing on fraud. I think for the next best action, that's the next thing that we're going to be dealing with as a team. So when we have this conversation again, I think we would have made progress on that as well.
Bongani, thank you very much. I've really enjoyed those insights. Thank you.
Thank you, Michael.
Well, as South Africa wrestles with unemployment, low growth and stretched household budgets, funeral cover remains the first line of defence. But as the proverb reminds us, tomorrow belongs to the people who prepare for it today. So if the industry is to move beyond overselling cover for death, it must pivot to enabling resilience for life through things like health and savings and education, all of that providing dignity. Bongani Madikiza has made it clear that the Sanlam-Assupol integration is not only about size, hefty size, 6.6 billion rand deal that, but about trust and efficiency and inclusion as well. To remember African life in its fullest sense, the task ahead is to help millions of South Africans plan. Well, that's all for this edition of the Monocle Banking Podcast. I'm Michael Avery. Thanks for tuning in. And as always, keep questioning the numbers, but never forget the people behind them.